Hi, everyone. We're going to get started here. Thank you so much for joining. My name is Reed Porter. I'm the Director for Transparency and Open Data here at Interaction. Today, we're going to be talking about impact investing, which is a topic that nests under our larger innovative finance portfolio. This is some work that we've been doing for over a year now with support from the Rockefeller Foundation. It's a spiritual cousin to a broader scope of work called NGO Futures, which some of you may be familiar with, which briefly is about how do NGOs adapt to a rapidly changing operating and funding environment, and obviously innovative finance nests right under that funding topic. So the purpose of this work was initially to assess what our members were doing in the space of innovative finance, pull out a few instruments and tools and uses to showcase and highlight what those members are doing, and then support members in evaluating the effectiveness of these financial instruments the same way that we would measure results on traditional grant mechanisms. So from that initial landscape analysis, we explored, I think, 17 different instruments, basically non-grant instruments for funding development work. And now we're doing a deep dive on a few in particular, things that we think resonate with our community, but people need a little more understanding of what it's about and how it would work for them to determine if it's the right tool for their portfolio. So today we're going to be talking about impact investing, which was one of those top tools that we identified in the landscape analysis. We're joined today by Alina Sarkisova, who has been involved in this work and engaged with Interaction since the beginning. She has broad experience in the space of innovative finance, both from the research side as well as the implementation side, in terms of diligencing deals, implementing and participating in some of these transactions. So she's the expert in the room. We're also joined by Alexis Bonnell from USAID. She's the Division Chief of Applied Innovation and Acceleration, and Chris Walker from Mercy Corps, who's the Social Innovation Director there. We were hoping to have Evan Gill from CRS, but she had an illness, so she sends her regrets, unfortunately. And with that, I'm going to get out of the way as quick as I can and hand it over to Alina.
Great, thank you so much. It's great to be here. It's an exciting topic that is becoming increasingly relevant for NGOs today, but it's an area that's also shrouded in quite a bit of mystery, particularly among the NGO community. And so we're here to essentially deconstruct for you a bit what is impact investing, how does it work, what are the key instruments that are involved, who are the main players, highlight some examples of how Interaction members are actually engaging in impact investing. So we'll hear from Chris Walker on that. And then giving a glimpse of how NGOs can engage with potential donors, and Alexis will talk about that from USAID's perspective. Just walking you through very quickly the agenda, so how this is going to play out. So essentially, I'll go on a 20-minute rant about kind of what impact investing is, kind of at the 101 level, and then I'll turn it over to probably Alexis to cover the donor perspective, and then we'll hear from Chris. And then at the end, we will also have some time for questions and answers. And there's a chat box that I think you all can submit questions as you have them. So please don't wait until the end. And then I think you can, I haven't used this feature, but I think there's a hand that you can click on, and I think Ben, who's sitting here with us, can unmute you. So if you'd like to ask a question in voice form. So what is impact investing? Impact investing is a relatively new term. It was coined only in 2007 by the Rockefeller Foundation, but the basic idea that investment shouldn't just be about maximizing profit is not new. It's been around for decades in such forms as socially responsible investing, also microfinance, all of which are kind of precursors to the field of impact investing. They're all part of the same grain, but there are some distinguishing features that set impact investing apart from these other sister movements, and we'll talk about that in a little bit. So this is the definition you see here up on the screen is the GIN's definition. So the Global Impact Investing Network it's kind of like an interaction, but for the impact investing community. And they are charged with building the field of impact investing. And they define impact investing as investments made into companies, organizations, and funds with the intention to generate measurable social and environmental impact alongside a financial return. So there's a couple of things here I'd like to highlight. So first is this very important aspect of intentionality. Social impact must be an intended consequence of the investment and not a secondary byproduct. Second, there must be the expectation of a financial return or at a minimum a return of capital. And investment returns can range from below market or concessional returns to risk-adjusted market rate returns. There must, so impact investments also cut across multiple asset classes or financial instruments. They can be in the form of fixed income, stocks or equity, cash equivalents, all of which have different risk-return profiles. And last but not least, there must be a commitment of the investor to impact measurement and reporting. This is a very essential piece of impact investing. So we're going to spend some time kind of breaking this down even further. But before we do that, let's take a step back perhaps and just kind of focus on why are we talking about this now? What is this interest in impact investing? So the rise in impact investing can be attributed to two main global trends. So on the one hand, you have a growing complexity of and scale of development challenges. You have a $2.5 trillion gap in annual funding needed to tackle those challenges. And there's kind of a broad agreement at this point among governments, charities, that they do not have sufficient capital nor the complete skill set that's required to solve these problems. And then on the other hand, you have the rise of new players. Aid is no longer in the exclusive domain of traditional donors. So private flows to developing countries have been outpacing official development assistance for over 2 decades now, mostly in the form of foreign direct investment, but also remittances and private philanthropy. And at the same time, the 2008 economic crisis has kind of shaken established beliefs about the risk-return profile of traditional investments. And so some mainstream investors like Morgan Stanley or Goldman Sachs are kind of looking to impact investing as a way to diversify their portfolios. And so the result is that impact investing today is estimated to be about $114 billion in assets under management as of 2017. And that's according to the 2017 annual investor survey that's conducted by the GIN. So going back to this idea of intentionality, as I mentioned, this is something that kind of sets impact investing apart from some of these other sister movements like socially responsible investing, corporate social responsibility, and ESG, which stands for environmental, social, and governance criteria. And the way it's different is that these other sister movements tend to employ screens to filter out socially negative investments, so divesting from things like tobacco or coal. And are often ESG factors in the valuation of their investments, not necessarily because they, believe in things like or concerned about things like climate change, although that may very well be the case, but more because it helps to improve their profits, because it makes good business sense. So impact investments, as I mentioned, seek to generate both social or environmental returns, but also financial returns. So if you look at this graph here, we have kind of target social environmental impact on the x-axis and target financial return on the y-axis. So traditional investment would kind of fall into this upper left-hand quadrant where companies are mostly worried about maximizing profits and don't really care about social or environmental impact. And then on the other side of the spectrum, you have philanthropy, which only cares about social impact, doesn't care about getting their money back or making a financial return. So impact investment kind of sits in this upper right-hand quadrant. But within this space, there is a lot of variation in terms of return expectations and how much return investors are willing to, quote unquote, sacrifice for added social impact. And so impact investors can be generally categorized into two main buckets. One is impact first investors, and these investors tend to optimize social environmental impact with kind of a floor for financial return, so at a minimum getting their money back. And these investors are typically more philanthropically minded. And then you have finance first investors who seek to optimize financial returns with some kind of minimum floor for environmental impact. And these are primarily commercial investors who seek market rate returns while achieving some minimum threshold for impact. These are not mutually exclusive, so that's not to say that some investors can't fall into both buckets. It just kind of depends on their primary motivation, and I would say most investors probably aim to be in that sweet spot in the very up at the top, kind of in that overlapping area, although that's very difficult to do in practice sometimes. These two types of investors often work together in what we call, and you may increasingly hear about more and more often, is blended finance deals. So deals that combine capital from impact first and finance first investors, and sometimes even add in philanthropic dollars as well. And in these deals, impact first investors accept sub-market rates of return as a way of crowding in private investors who are more finance first, as a way of kind of creating this symbiotic relationship. And to the side here, I've included kind of who the main investors are and kind of where they fall into this spectrum. So an example of an impact first investor might be an NGO. For finance first investors, so institutional investors like pension funds would normally be kind of in this bucket, as they have typically fiduciary responsibilities that really limit their ability to be concessionary. I would also put DFIs into this category, so development finance institutions, so places like the IFC, the International Finance Corporation, which is part of the World Bank Group. And then other types of investors are quite flexible, and they can be either or. So an example would be family offices, high net worth individuals. Foundations will often have two separate arms that they can deploy their capital through. So PRI stands for program related investments, which tends to be more concessional. And they also have what's called mission related investments, which is kind of investments made directly out of their endowment, which are more market rate seeking. And you also have fund managers. And the same framework applies to who's on the receiving end of those investments. They can really range from nonprofit to for-profit. On the nonprofit side, in terms of that overlap with impact investing, they tend to be what we call either enterprising nonprofits or social enterprises. These are nonprofits that are engaged in some kind of revenue generating activities, often through a for-profit arm or subsidiary, that make them more financially sustainable and not as reliant on donor funding. An example of this might be Grameen Bank. And you also, on the for-profit side, you have companies that are called double or even in some cases triple bottom line companies, or organizations that focus not only on financial returns, the first bottom line, but also social impact, the second bottom line, and sometimes environmental impact as well, which is that triple line. An example of these types of companies might be B Corp companies like Patagonia, that would fall into this category. And these are basically for-profit companies that are certified by the nonprofit B Lab to meet rigorous standards of social and environmental performance, accountability, and transparency. In terms of asset classes, just like with investors, investees, impact investments, as I mentioned earlier, can cut across multiple asset classes or financial instruments with different return expectations. So they're not just limited to a single asset class, which in effect makes impact investing more kind of as a strategy as opposed to a single instrument. The most common asset classes that NGOs will come across are kind of on the left-hand side of this spectrum, so in the pink. And the most common instruments will probably be some form of equity or concessional lending. There are also new and emerging instruments that don't fall neatly into any single asset class, at least not yet. So things like impact bonds, development impact bonds, social impact bonds, these new social success notes that Rockefeller just launched at Skull World Forum, which in effect are a type of outcomes-based contract that exhibits features of both debt and equity. If you are interested to learn more about these instruments and how they work, you can refer to the annex for more details. I believe there's also some information on our website. And then we also did a very similar webinar back in December on results-based financing. So please be sure to check that out. Last but not least, there's a saying, what gets measured gets done, which is why impact measurement is so critical for impact investing. So there are a number of tools and frameworks out there that serve different purposes, often in a very complementary way. And we've laid out the most common ones here. There's certainly other ones that we haven't included, but IRIS and the SDG Compass are both what we would call kind of indicator aggregators. So IRIS sits with the GIN, the Global Impact Investing Network, and serves as the catalog of generally accepted performance metrics used by the majority of impact investors, and was developed using existing frameworks from various organizations like the OECD, WHO, ILO, etc. And SDG Compass is like IRIS, but for the multilateral space. And if you're a business, for instance, you can go to the SDG Compass guide and filter the indicators to your target SDG. Lean Data is an indicator development tool developed by Acumen. It's a tool that helps organizations develop appropriate indicators on a project-specific basis. And they do so in a way that takes into account beneficiary feedback or client feedback, and leverages low-cost technologies. And lastly, B Impact Assessments is an impact certification scheme for for-profit companies only. And basically, companies that go through this type of assessment are evaluated on a variety of different criteria related to their environmental footprint, how they treat their workers, what their relationships are like with their customers and with their community at large, and also any kind of governance structures and accountability mechanisms. And companies that perform well can either get this GERS certification or become a B Corp or get B Corp status, which basically is a type of legal status that says that they can approach their social and environmental impact with the same rigor as their financial returns. It's important to note that these are just tools and that there is no universal set of metrics or measurement frameworks that everyone is held accountable to. And that's both good and bad. So it's good because these tools are highly customizable, and you can easily find sort of the right fit framework for your organization. But on the other hand, it becomes very difficult to compare investments across organizations and assess the sector's kind of overall progress against a common set of development goals like the SDGs. As it turns out, we have a workshop on this kind of in the works right now, where we will be debating these things later in June. So stay tuned for that. So now that we've covered the basics of impact investing, we can turn to kind of the what do NGOs have to do with it question. So in 2016, INGO Impact Investing Network conducted a survey of NGOs that were engaged in impact investing and published a report on their main findings. And what they found was that the vast majority of NGOs were in it to, first and foremost, amplify their impact by enabling market-based development in their target sectors and geographies. So actually 84% of respondents said that this was their main reason for engaging in impact investing. Another important but secondary reason is to diversify funding sources. So oftentimes impact investing, so the returns that an organization would get from impact investing creates a pool of, oftentimes a small pool, but nonetheless a pool of flexible financing that they can use to invest in things that donors typically wouldn't fund directly. So things like innovation or internal organizational health, M&E systems. And about 45% of respondents to the survey chose this option. Only 23% said that they found this was a great way to offset decreases or expected decreases in other funding sources. And that's important because, in other words, what this means is that most organizations do not see impact investing as a significant source of revenue that will basically obviate the need for traditional donor funding. And that's important to keep in mind for people who are kind of, coming into the space because they hear about it so much. And these results are broadly aligned with the survey that Reid mentioned earlier that Interaction did on Interaction members as well. So what value can NGOs bring to the table? So there are a number of important assets in NGOs' arsenals that could make a meaningful contribution to impact investing. First, of course, is the on-the-ground presence and networks. This can help guide investors on where investments can be best deployed and help make connections that facilitate deal flow. Local knowledge, so NGOs can use this to help navigate local politics, facilitate communication, and mitigate risks. Sector and technical expertise. Many NGOs have developed very deep sector and technical expertise through all of their decades of experience working on the ground. And this can help identify gaps in the market, assess business ideas and overall viability. They can add value to investments through technical assistance as well. Impact focus, so NGOs are 100% mission aligned and can fill a critical gap in providing seed and early stage financing. And last and not least, NGOs have some of the most well-developed and tested M&E systems, which is often a challenge for investors, as we discussed. So NGOs can definitely contribute to kind of closing that gap by working closely with investors. And last but not least, what does this mean in terms of the types of roles that NGOs can play in impact investing? So one obvious one is to be an investor, so either directly investing in social enterprises or through a fund, through an intermediary, or through a microfinance institution. NGOs can also be on the receiving end of investments, so developing social enterprises or monetizing their assets in some way. They can provide technical assistance to social entrepreneurs, to impact investors and other NGOs. And they can use their advocacy and convening power to support the development of the sector as a whole. So that wraps up the Impact Investing 101 section of this webinar. So with that, I will turn it over to Alexis to kind of give us the donor perspective in terms of how NGOs can engage.
Thanks so much. I was taking notes because I feel like every time this topic comes up, I learn something, and there was some wonderful clarity in the slides that you put out. So hi, everyone. This is Alexis Bonnell. As mentioned before, I'm the Chief of Applied Innovation at USAID, and what that means is I've had the great honor and privilege of seeing the incredible kind of different ways that USAID impacts the capital curve, if you will, of this investment ecosystem. Many of you may be familiar, obviously, with the cash and grants programs that we do to invest in different organizations, many of which are social entrepreneurs or are B Corp for profit. But obviously, we also have funded things like the Global Innovation Fund as a way of contributing to organizations that can take equity plays. We also, obviously, through our DCA programming, work in the area of guarantees. And as mentioned before, in the general financial innovation spectrum, have a lot around pay for results or some of the newer financial innovations that we're really excited about. So my goal here is to, I think, really just give some feedback on maybe what would be considered for many folks, like what is the soft entry into impact investing? How is this relevant to what you might do with USAID or the way that you might think about partnering? And so I hope that that's useful. I'm going to go through about 11 specific points. And so I'm happy to package this back up and send it out to those of you that joined on the webinar as well. So I think the first point that we've really learned, point number one, would be really clear about why you're attracted to the impact investing game. I think there's a couple of different points just to reemphasize things that were raised, where we've seen, I think that idea of intentionality and clarity around why your organization might be drawn to this or what it's trying to achieve is really important. So number one, as I mentioned before, there are folks that are interested in kind of diversifying the activities to attract different donors or high net worth individuals, a larger share of wallet. That is certainly something that I've seen different NGOs be really successful with. I think the other thing that's interesting about impact investing is NGOs are in a unique position to even consider making a percentage return on their work. So obviously, general impact investing would be at minimum usually a return of full capital. But I think with NGOs, that idea of if you're going to spend, $100,000 on a program, and actually you can structure that program so that you might get 20,000 of that back, that actually is 20,000 that can go into other types of programming in the future. So in addition to diversifying funding sources into the NGO, a lot of NGOs are realizing that it isn't necessary that every project is 100% outlay and non-recoverable. So I think impact investing, again, kind of that soft entry, has been an interesting way that different organizations have thought about it. Another one, to be perfectly frank about it, is the fact that we've seen a lot of NGOs enter the impact investing space and really push their organizations to look for who these types of alternative providers, to social impact and development impact as a way of increasing their own competitiveness or the offering that they have when they navigate more traditional funding. And so we've seen a lot of great organizations that have, in essence, looked at some of these investments in a future kind of sub to their prime position on a lot of different things. What's also interesting about that is that some of the plays we've seen people make in impact investing, beyond just the kind of diversifying of activities and donors, is actually the diversification of talent and I guess I would classify as specialties. So, some NGOs are really confronting whether impact investment into different organizations may actually be a better option when they're looking to do development work than, for example, maintaining full-time employees in particular areas and specialties. So it's an interesting way to diversify talent base and access, both from the competitive structure, but as well as, being an impact investor yourself. And then, of course, the fourth is that idea of pursuing market returns, or at least full return on capital. And so I think these are all really good things that NGOs should be thinking about, could be thinking about. I will say, as someone that has been lucky enough to see a lot of people navigate this, being clear about which of those you're in is really what you want to try to clarify with your leadership from the very beginning. But don't be afraid to experiment. I think this is an exciting new area for all of the international development community. So number two would in essence be, the way you can work with USAID is actually coming to us. A lot of people don't know that we actually have an innovation concierge service and things like the Global Innovation Exchange, where, as I mentioned, we've made more than what we would consider to be over 1,000 impact investments. So investments into entities that we feel provide alternative ways of doing our development work or achieving impact. And at any given time, if you're looking either to consider what types of organizations might be at a point of maturity and might be attractive for your own impact investing, it's always great to think about what business intelligence is already out there. So there are a lot of different donors who have made plays and who are incented to see those plays actually be carried on by other players. And I'm always surprised by the fact that people don't know they could, call us up and say, hey, what's really good in the energy space? What are you seeing? We may not be able to say this is better than that, but we can certainly tell you, the basics of our experience, the feelings that we have around the type of evidence and grantee that an entity has been able to be thus far. And, we would love to see more players kind of come into the ecosystem there. I think additionally, one of the words of caution that I would have for many of you is that it's been interesting how many great resources are out there, but they are not getting tapped. So as an example, I was talking with an NGO who was doing some impact investing, and they mentioned a particular investment they were making, which sounded really good. And I mentioned to them, well, did you look, for example, at the Global Innovation Exchange or the Solutions Bank to understand what other competitive organizations are out there with where you're looking to make your investment? And they didn't know, for example, that there were already 32 competitors in that space. And the point isn't that there shouldn't be 32 competitors. That's awesome. It's driving innovation. It's driving the way we do business. But as investors, it's really critical for us to put on a different hat when we think about business intelligence, when we think about what are alternative options. And so to anyone out there looking in the impact investing space, I would say the motivating factor of getting in there and saying, this sounds really cool, it's awesome, they're doing great work, has to be strengthened by a willingness to do the type of due diligence, competitive landscapes, et cetera, to understand what alternative investment opportunities there are. And really also, it's important for our industry to push those entrepreneurs, those social impact organizations to understand themselves about their competition and to have that kind of hunger and appetite, which we don't often talk about the power and benefit of competition in development, but actually this is something that is a really important aspect of impact investing. So number 3 would be, in essence, think about, as I mentioned before, those types of organizations or those investments as future advantages that you might have as you compete for donor funding. So for example, being able to say that you have access and are able to take advantage of, and I'm just making up examples, but let's say a farmer capacity or a farming company in Kenya, that's very different than maybe other takes on a model. And so I would say this is a time where donors are really excited about seeing things like co-creation, the leveraging of partnership and different advantages. So I would encourage people to really think about how not only this is maybe a different line of business for NGOs, but how making those investments should in fact make your overall approach more efficient. Additionally, as you start to move into the impact investing space, what you also start to do is to unlock potential tools and funding streams within USAID that NGOs may not have classically accessed before. So as an example, our Global Development Alliance, that's something that we do with usually private sector entities, kind of co-investment, et cetera. And so by moving into impact investing, by having those types of companies either, and in some cases can even be acquired in full, may actually give you different ways of these partners or companies you're investing in to actually access development resources along the capital curve. I think the one that I'm most excited about is share what's working, share your evidence, share your results. You would be surprised how incredibly high our appetite is to celebrate your work. So for those of you that are looking at these evolutionary models, are willing to try more financial innovation, making impact investing bets, we would actually love to help you tell your story, to be able to signal that this is an exciting new way the industry is going. So even if it's not something that we funded, we love to hear about it. We love to be connected with you on it, and we love to be able to learn from your investments. Number 6 would be actually encourage the companies that you do invest in to actually compete for USAID business. I think it's interesting that a lot of people will immediately jump to kind of an investment fund or more classic venture capitalist without realizing that a lot of the investments they're making in these companies actually may make those companies valid vendors, if you will, to donors. And I think that diversification of who we work with is really exciting to us. So please do make sure that if you are going to invest in an organization because you believe they're really successful, then there's probably some scope there for them to also play with organizations like USAID. Another thing that was brought up earlier, and this is kind of the number 7, is because impact investing is so driven by evidence, by very clearly measurable results, what is interesting is the ability, if we work together, to share data on helping to influence our industry's kind of standard understanding of what I would call hurdle rates. Meaning, the more we understand what it takes to achieve some of these outcomes in private sector or social entrepreneurship space, the more it actually allows us as large donors to understand what the cost of these types of solutions or impacting someone's life in a particular way can really be in the modern age. And that's actually really exciting to understand what is, as we get more into evidence, what would be a cost per beneficiary model, or other types of information flows that we may not be able to make a specific individual concrete decision on, but having that type of business intelligence as an industry to understand what the range of costs for particular outputs or outcomes is really an important element of advancing how we work. Finally, make sure that it's really interesting for us a lot of times, much like having a prize winner or a challenge winner, as NGOs and others get into this space, they'll do a prize or challenge or make an impact investment, and they'll say, yay, we're done, we made the investment, or we have winners for our challenge. And I would actually encourage you all to understand that's actually when the hard work starts. So thinking that you've made an investment, you are not absolved at that point in time. I think people in organizations that are really smart make investments much like a venture capitalist would, in understanding where they have additional benefit that they can add to that investee. So whether that's, as I mentioned before, being able to navigate the country, being able to bring in, make connections with other investors, being able just to help someone get something through customs. It's always amazing to me the relevance that and the power that NGOs and NGO staff have in the field, and yet for some reason the new model of impact investing and the maybe old model assets of all of those types of strengths are not necessarily combined. And in fact, a lot of NGOs tend to stand up very separate entities from an impact investing that aren't cross-collaborated or cross-benefited by their current staff and structures. So I really encourage you to think about where your strengths are. And while setting it up for legal and financial reasons separately may make sense, making sure that you're not actually throwing your special sauce out the window as well, and that you're able to leverage those has been something we've seen, really great players do well. And finally, I would say recognize that an impact investor likes a good bet, right? And what that means is the more you can help the investment you've made grow, validate their business, become more savvy, reach scale, the greater chance of an exit or of viability. And I think that question of when your exit or if you plan on having an exit is really important. Typically in impact investing, you don't hear people talk about the exit as immediately as you would in venture capitalism and other types of things. So I do think it's important to understand what your long game or exit is and be able to make sure that your investment decisions really match up with those. And finally, the last thing I'll leave you with is that we actually have a number of new tools and new structures where we're excited to see missions actually want to set up their funds as legacy programs, et cetera. So if you're an NGO who doesn't necessarily want to do this on your own, but would love the idea of potentially bringing in some investment dollars, partnering with a mission in a given location, et cetera, then I would love to, for those of you that are interested in that, connect you more with the folks at USAID who are navigating that. So I will end there and hopefully turn over to, I think, my good friend.
We're going to pause for questions real quick, and apologies, we probably should have done this after Alina's 101. So yeah, we'll take a minute, and if you have a question either for Alina or for Alexis, either enter it in the chat or raise your hand and we can unmute your mic.
Yep. So thanks, Alexis. That was great. I'm also similarly learning new things. So we have two questions, one on NGO roles. So in addition to the 4 roles that you've laid out for that NGOs can play, can't NGOs also serve as a trusted deal sourcer or better?
Absolutely. I mean, so what I'm really excited about is we're by far not the only player here. And in fact, last September at Global Innovation Week, we had over 21 of our major partners make new commitments to the way they were going to work differently as far as being more innovative and evolutionary. Many of those, some of you may be on the line, were actually enterprise funds and other types of innovation vehicles. And so we have a significant appetite to see what you're creating, to potentially follow you in funding it. But most importantly, we also hope that it influences the other ways that we classically work together. But yeah, if you have good investments that you've made, we would love to know more about them.
Great. And another question is about the laws regulating impact investing for nonprofits. So one person says, I've heard that fundraisers at nonprofits are prohibited from seeking investments. And this can also be a question for Chris, maybe.
Yeah, I think that's probably Chris's specialty. I think my legal team would kill me for wandering into their territory. So I would say maybe we shelf that for Chris.
Yep. Okay. Great. Shall we move on to Chris then? Chris, are you still with us?
Yes, I am. Can you hear me?
Yes, we can hear you.
Great. Well, thanks, Alina. Thanks, Alexis. It's fun to follow on 2 great presenters who've already laid out all the basics, so I don't have to go through those. I'm going to focus really on our specific example from Mercy Corps. We have our own impact investment fund called the Social Venture Fund. And I thought I'd start by giving you a bit of the story of the evolution of our fund. I think you'll see a lot of common elements in this that are shared by other NGOs. So first, we didn't develop this based on some aha moment that we had sitting around a strategy table. This was really an evolution of work that was ongoing for quite some time at Mercy Corps. And it was a confluence of several different factors or trends here. Number one, like many other NGOs, we're really focused on helping local communities solve their own problems, and how can we best support them to do so. And working as a traditional NGO, we have a lot of mechanisms or tools to support civil society groups, to work with governments, to work with communities on the ground. But we also saw that local entrepreneurs were playing a significant role in solving their own communities' problems. And we wanted an appropriate tool to work with entrepreneurs. As an organization, we've also been involved for decades in market-based work. Back in the 1990s, were helping to set up microfinance institutions for underserved populations. We have staff that are very entrepreneurial, who are coming up with their own business ideas that could solve the challenges of poverty that they were seeing doing their regular work with Mercy Corps. And so over time, we had different staff setting up and spinning out social enterprises. And that we started to think about ways in which we could support our own staff more systematically to set up businesses and to take them outside of Mercy Corps and help build them up. So about 5 years ago, we created the first iteration of the Social Venture Fund, which was a small team with some funding that could be used to incubate those business ideas developed by Mercy Corps' own staff. And we operated that for a while, and we're finding some really great business ideas proposed by our own staff, but we ran into several constraints or challenges around that model. And also, as we were helping our staff develop these businesses, we were scanning that competitive landscape. Who else is out there building similar businesses that could be competitors to the ones that we're incubating. We started to see that there are actually quite a few self-identified entrepreneurs who are building viable businesses, and we began to think, well, why are we artificially constraining ourselves just to investing in our 4,000 to 5,000 staff members when there are 7 billion people out there in the world creating really innovative businesses to solve social problems? So we, like the entrepreneurs that we invest into, we made our own pivot a few years ago and decided to stop incubating businesses internally and instead use the team and the funds that we had raised to invest in external social entrepreneurs who are focused on solving the problems that Mercy Corps cares about, and that we're creating businesses that were very much aligned with our own mission. So we've been investing through our social venture fund now for 2.5 years. We raise our money philanthropically. So we get capital as donations from high net worth individuals who donate to Mercy Corps. We use that capital to make equity investments or investments via convertible notes, which is a kind of a quasi-equity, into startup businesses that have the view to scale to reach millions of customers and to solve some significant problem. We are investing usually in the first external fundraising round of an entrepreneur. Our ticket size, as we say, the amount of money that we would put into a business, could range from $50,000 up to around $250,000, $300,000. We co-invest, so we come in alongside other investors in that initial round. Often those other investors are individual angel investors. Often we are the first institution coming in. We have selected to invest at such an early stage because there's a real gap in financing available for startups. Once a company has reached a certain size and has a credible, viable business model that's proven out, it's easier for them to attract capital. But there's a gap from the point at which a business is formed and is doing its proof of concept to the point at which it's big enough to attract other capital, where there are very few investors. And we felt that that was an appropriate role for an NGO to play in investing. So we have made 12 investments so far. We are, as you can see on the screen, very focused on a few countries, and we're focused on a few sectors where we feel that we have a lot of value to add. And that's another important point. It's one I think you were making, Alexis. What is our value proposition as an NGO doing impact investing? Part of it is the type of capital that we provide at such an early stage. But we also felt that as a big NGO, we had some other values to bring to the table. So we have been testing these out over the past few years to see what value do we bring to entrepreneurs that they truly value and benefit from. We certainly benefit from having close to 5,000 staff on the ground working in these countries with a lot of technical expertise and local knowledge that helps us find good investment opportunities and also helps us when we're conducting due diligence on those companies. But once we've invested into a company, our local teams can provide quite a lot of support. We have focused on a few things that we can bring to entrepreneurs. One is advice on governance. At a very early stage, a lot of these ventures are still setting up their boards. So we try to provide some support around that. We are often a board observer ourselves, so we can provide strategic advice via that role. We also have a lot of local staff who have a huge amount of technical expertise that's very valuable to entrepreneurs. So providing that technical advice has proven to be very important. And providing introductions and connections to networks has also been valuable. As entrepreneurs, for instance, seek to expand their market into new geographic regions where Mercy Corps is operating, we've been able to provide those introductions and facilitate their entry into new markets. We've also been able to connect entrepreneurs to partners for business development opportunities. And finally, we've been able to provide a lot of support in introducing businesses to other investors. Because most of the businesses that we invest into are on a high growth path and they'll need to raise funding multiple times. We only invest in the initial round, but one of our objectives is to help these businesses get to a point where they can raise additional capital. And so we found that that Mercy Corps' platform is very useful. But one other area where we provided support is plugging some of these businesses into the programs that we're operating, our grant-funded programs. That's been more challenging, but we have found opportunities to do that. So to date, we, as I mentioned, have invested in 12 different companies. They have collectively reached over 700,000 customers. So that we feel is pretty high leverage for the capital that we put into this. We've also found that our investment can leverage quite a lot of other investment capital. Where we stand right now, our capital is leveraged 15 times as much investment capital, either coming in alongside of us or in a subsequent investment round. So that allows us, we feel, to have outsized impact through our investment activities. We, though, to Alina's point, we don't do this work to make money from Mercy Corps. We do this work to amplify our impact on the ground, and to give ourselves another tool that complements the tools that we currently have to deliver impact. I'm happy to answer any questions on this. I just wanted to give you a brief overview of what we've been up to, and happy to provide some guidance.
This is Alexis, really quick, Chris. I just wanted to follow on something that you said in the very beginning, which I think is something that has been really exciting about seeing investments in things like local entrepreneurs, social entrepreneurs, et cetera. And that is the fact that, they have most of the time a real and direct relationship with the end customer. And that idea of really investing in an organization where their day-to-day is very much fueled by the perception of customer value, really respecting kind of the customer is, I think, been something that we have really enjoyed being able to, to see grow, and to hopefully be something where the magnification of really understanding demand-driven development, looking at customer value is something that has been exercised, I think, much more acutely in this type of funding and program diversification, as you mentioned. So I wanted to really draw a point that I think that's something that we don't talk enough about, but that is really important. So thanks for raising that. Yeah,
and it is an excellent point. It raises another reason why we do this work. We feel that we can learn quite a lot from the entrepreneurs that we're investing in, because they're at the cutting edge of new business models and new approaches to solving the problems of poverty. What we're trying to do is take some of those lessons and bring them internally to Mercy Corps. That's challenging to do, and we're still trying to identify the best ways to do it, but we feel that that can help us in our traditional work too. And to your point, Alexis, seeing how entrepreneurs have to respond to customer feedback, they have a built-in feedback loop. So they need to design a product or service that actually does meet the needs of underserved populations, or they will be out of business. How do we build those feedback loops into our grant-funded work is a question on our minds.
Great. Alexis, how much time do you have left?
I've got about 5 minutes.
5 minutes, great. So Chris, there's a couple of questions for you, but before we get to those, perhaps Alexis can address one question that's more for USAID. So how will USAID's reorganization affect the agency's interest and ability to support impact investing?
Without getting too specific, I think what I would say is I'm really encouraged by the vision of our administrator. He put out a really audacious target, and that was, how do we work ourselves out of business? And the reality is you can only do that if you have the capacity and will of not only the host government, the customers, I like to call them, but also other partners playing the right role at the right time. And so I think, an appetite to see additional leveraged funding, an appetite to see new players in development like impact investors, an appetite to be blending our finance and be financially innovative, I don't see lessening in the near future. And I'm really proud to be part of, the administrator who's willing to really take such an aggressive stance that this is, the point of our work is to not be needed. And so we've got to find other partners and ways of doing it to make that a reality.
Okay, last call for questions for Alexis before she needs to jump off.
But I'm a real life person, and if you have a question, you can also just email me and reach out. A lot of my colleagues at USAID are doing incredible things in this area, are so excited about it. We're deeply appreciative of players like Mercy Corps and others that are pushing the envelope. And so, don't be afraid just to have a conversation with us about this, to figure this out, to see where things go. And don't be afraid to let us know how you're learning and changing, and to share that with the rest of the community. So go out there and see if this works for you.
Thank you so much, Alexis. All right, so we have a few questions for Chris. So one is around this legal question, right? To what extent can nonprofits legally seek investments? And then there's another question around, has Mercy Corps used its investments to increase its competitiveness with donors in terms of future resource partners, et cetera?
Yeah, so on that first question, I'm not a lawyer. I would encourage everybody to consult their own general counsel. However, when you're out raising capital where you have to pay it back to the investors, when you go out and fundraise, it triggers any number of regulatory concerns. You have to comply with certain regulations around how you solicit investment. And so you need to be aware of what those constraints and restrictions are in terms of how you do that. So I think that may be what the caller is referring to. In terms of, does this increase Mercy Corps' competitiveness? It's a great question. We have been raising all of the capital for our investment activities through high net worth individuals making individual grants for us to invest. That question is on our minds. It's something that we'll be testing out to see, is this something that is of interest if we were to say, integrate this investment approach into larger programs where we could not only invest into entrepreneurs, but also start working through a programmatic approach to address some of the constraints that private sector entities face in trying to scale up their impact. So yeah, I think it remains to be seen.
Great, thanks, Chris. And then we have a question from an MBA student who says that I want to introduce my classmates to impact investing. Where can I find resources that help increase interest from the for-profit perspective? So if I'm understanding the question correctly, how can I find resources that help increase interest from the for-profit sector into nonprofits? I think I'm understanding that question correctly. So yes, so she says yes. So I mean, I think I mean, there's not a ton of resources I think out there for NGOs, and correct me, Chris, if I'm wrong, but I think one great step is to consult with the INGO Impact Investing Network, which I know, Chris, you're a part of, and kind of keeping, referring back to our interaction zone work and future engagements. I think that those are good first steps, but I don't think there's actually enough resources out there specifically targeting NGO audiences.
Yeah, I think the role of NGOs in impact investing is still relatively new. But as you mentioned, there is an INGO Impact Investing Working Group. It's just an informal gathering for peers to share knowledge and experiences so that we can all learn from each other. It's a network that's being convened by the Aspen Network for Development Entrepreneurs in Momentum. So it's open to any NGOs who want to join. In terms of business school students who are interested in learning more, I do think the Global Impact Investing Network's website is a great introductory resource. It has functions as somewhat of a clearinghouse of information around impact investing and can lead you to any number of resources about what impact investing is. There are also a growing number of business school case studies on impact investing and on social enterprises that have raised capital and how they've done it. I know that there's a module that the Harvard Business School has online that points you to various case studies that can be utilized in classes.
Great. And I think particularly in terms of like conferences, I think NGOs certainly are struggling, I guess, to be part of that conversation sometimes. But I think are increasingly you see more and more NGOs kind of featured in the panels, kind of highlighting their work. So, but we still certainly have a long way to go.
Mm-hmm. And I would let me use that opportunity to just make a couple of other points about getting involved in impact investing, if any of the audience are considering this within their own NGOs. It's important to build up a track record of doing this if you want to raise money to do it in the future. And so what we did is we just started doing a few investments as a trial to see what this would be like. As I mentioned, we were supporting our own staff, and then we decided to start investing externally. So we did a few deals to see how it would go and to see what kind of value we provided. We didn't go out to aggressively raise more funding until we felt that we had some track record and some evidence that we were able to do this well and that we could bring value to the impact investing sector and to the enterprises that we're investing in. In general, people also look at your staff. Who's doing the deals? Who's doing the investing? So you need to demonstrate not just a track record, but that you have some capabilities on staff to do this based on the staff's previous experience or track records. So those are sorts of things that people look at. We've raised our money philanthropically. Other NGOs have looked at ways to bring in capital from return-seeking investors. Again, that triggers a whole set of other considerations, legal and otherwise. We haven't gone down that path, in part because we're investing at such an early stage. Really, the only way to make the economics work for doing investments at that stage is to subsidize our costs of doing it internally. And so part of that is having philanthropic capital that we can then invest. And if we do get an exit, if we can sell our stake in a company, that money goes right back into our fund to be reinvested in other ventures in the future.
And there's another question in terms of sectors or industries that are kind of the focus of impact investing. So, so one person said that are there certain sectors or industries that are more fruitful for impact investing, or so she noticed energy and agriculture being mentioned a lot. What about other sectors like education? So I guess the question is it because there's, we're seeing a lot of activity in certain sectors because those sectors are prone to kind of more market-based solutions, or is it because we see some activity happening in one sector and there's sort of this multiplication effect, right? Because others, so there's like some proven models, and so people kind of want to jump on that as well.
Yeah, Alina, I think it's what you're saying, which is there tends to be more activity by impact investors in certain sectors that are market-based, but also where there is now a big enough pipeline of ventures to invest into because of any number of dynamics, but one of those dynamics would be a signaling effect that we see a few companies growing and succeeding, so other companies jump into that sector because they see a business opportunity as well. Then that attracts more investment capital into that sector. So certainly we see a lot of activity in agriculture and clean energy, so to some extent in areas like drinking water. There's some activity in education. There's a lot of activity in healthcare. It's actually pretty broad when you look at it. Some sectors, there's just less activity, but investors have been looking pretty broadly at market-based opportunities.
Right, and I would imagine that it's also kind of dependent on what type of investor you're talking about and the types of returns that they're expecting. So I would imagine, for instance, impact first, finance first investors to kind of target more specific sectors that tend to be more developed. So the thing that you mentioned, like clean energy, kind of in developed markets, as opposed to kind of more impact first investors that tend to focus more on like bottom of the pyramid and would are more likely to focus on things like health or education.
Mm-hmm. Exactly, and we are at Mercy Corps. We are focused on the basic pyramid. We are an impact first investor, which is why we do it. But there are many different shades and colors here, and we invest equity at a seed stage. There's room for NGOs to invest equity at later stages. There's room for NGOs to be involved in providing loans, to do debt investing. Companies, there's a huge variety of companies out there that could have social impact and environmental impact. And all of these companies have various financing needs. So we are addressing one financing need for one stage of company. because we believe that that's where, with our skill set on staff and the work that we're doing on the ground, where we that there are many other roles and that NGOs could play in the impact investment sector by providing different types of financing for different types of companies.
Mm-hmm. So one question is around quasi-equity. What does that mean?
Yeah, well, I'll try not to get too technical about it. It essentially means that when you're a very early stage company, you just started selling your product or service in the marketplace, there's very little data available, so it's very hard to say how much is your company worth. And when you're investing equity into a company, you're basically saying, look, I'm going to put, say, $100,000 into your company. That translates into a certain percentage share of ownership in that company. But to know what percent of the ownership you have to place a value overall in the company. It's just really hard to do that at a very early stage. So a convertible note is a type of debt. Essentially, we're making a loan to the company that needs to be repaid, but we hope to convert that loan into an equity share of ownership in that company when the company has grown to a point where other investors can place a value on it, and then we know what percent we own. So it's a loan that converts into equity over time based on certain circumstances occurring. It's a common form of investment for very early stage companies.
Thank you. So we don't have any more questions from the audience. I'll give people maybe a few minutes to see if they want to ask any last minute questions. And in the meantime, I have one or two questions that I'd love to get your thoughts on. So one is around fundraising. Was it difficult to raise the initial investment? I mean, it seems like Mercy Corps had a pretty compelling value proposition in terms of filling that gap in the market in terms of seed capital. But was it difficult to raise the initial investment, and sort of what about the subsequent rounds of investment? Are they typically different types of donors, or does the profile of the investor change?
Yeah, I would say impact investment fund than it is to fundraise for any number of things that an NGO wants to do. You still have to find donors. In our case, donors. We're return-seeking investors. We're raising from individual donors who are aligned with what we're trying to achieve. So it's interesting. We often get into conversations with people who, the second they hear impact investing, switch from their role as donor into their role as successful entrepreneur or successful investor, and ask a lot of questions around the investment dynamics and the investment criteria that we're using. This idea of taking a donation and converting it into an investment that will generate a return that we could then hopefully reutilize in the future for more investments. It's a relatively new concept to a lot of people. There's many of you know Ross Baird, who runs Village Capital, which is both an incubator and an impact investment firm. He often talks about two-pocket thinking by donors, that in one pocket they have the money that they want to give for philanthropic purposes, and in the other pocket they have their investment money that they're just trying to maximize financial return. How do you turn those two pockets into one pocket and help people realize that the money that they are giving away can also be used for investment purposes to generate high impact over time. So that's been a challenge that we've found. The dynamics are very different if you're out there trying to fundraise from investors who are expecting to get their money back with a financial return from putting it into your fund. That's just a whole different area of fundraising that we have not engaged in.
Got it. That's very helpful. Thank you. So no more questions, and I guess I'll ask one last question, and that's around, for those of them kind of in sort of at the early stages of figuring out what their engagement in impact investing should be, what would be your suggestions in terms of like kind of step 1, step 2, step 3? What questions should they be asking? How should they go about answering those questions? Like, who should they be bringing around the table at this early stage, like either internally or externally? Do you have any thoughts or suggestions?
Yeah, three thoughts. Number one is, why do you want to do it? In our view here, you shouldn't be doing it if you think it's going to raise a lot of core funding for your organization, because you're going to be a successful investor and generate big profits that can be used to fund your activities. We think it's very much a tool to help you amplify your impact and support your mission as an NGO. So number one is, why do you want to do it? Number two is, what do you bring to the table? What value do you have as an NGO that could be beneficial to the social enterprises that you might want to invest into? In our view, if all we have is capital, we shouldn't be involved in this, because there are any number of investors out there that have capital to deploy. We do it because we feel that Mercy Corps' assets can also be beneficial to help early stage socially oriented entrepreneurs build their businesses and deliver more impact over time. I think those are really important. The third consideration is, and it's related to the first one, is, what problem are you really trying to solve? You don't want to latch on to impact investing as a cool tool and then try to find a problem that you can solve with it. For us, we were seeing a lot of entrepreneurs doing really interesting work because of the programs that we were implementing on the ground, and we were trying to solve the problem. Well, how can we support or engage with these entrepreneurs in ways that's beneficial to our mission of delivering impact, as well as beneficial to those entrepreneurs? And we felt that we were well positioned to invest equity into some startups, but there are any number of other ways in which an NGO can support social enterprises and help them achieve their missions that would also align with an NGO's mission. So I think it's important to start from the standpoint of, what is the problem you're trying to solve, and then what do you bring to the table to help solve that?
Great, thanks, Chris. So I think we'll be wrapping up now. Thank you so much, Chris, for your time and great insights. Hopefully this will be part of an ongoing conversation as Interaction tries to schedule some additional events around this and other topics. So hopefully we can stay engaged. If you have additional questions, feel free to email the team, and we'll do our best to answer any remaining questions. And then we have compiled sort of, if you're a complete newcomer to this, we've compiled, if we can go to maybe the next slide, just some further reading and resources. But we certainly hope you will stay engaged with us moving forward. Reed, Ben, do you guys want to add anything?
No, just wanted to let everyone know we appreciate you making the time and joining us today, and thanks for all the great questions. Thanks to our speakers, Alina, Chris, and Alexis, and we look forward to chatting with you again. If you do have any questions, we'll follow up with slides and the annex that Alina just mentioned, but you're also welcome to get in touch with us via email. We'll include at least Ben's contact, and he can triage questions to the appropriate parties. So.
And in addition to the in addition to the slides, there will also, as I understand it, be a recording available on Interaction's website in the next week or two.
All right. Thanks again. Have a good day.